Rachel Stempski is a real estate agent based in the Niagara region. Rachel has a long track record of investing in real estate personally, owning over 30 rental apartments, as well as helping her clients through the various challenges that arise when owning rental properties. Welcome to the Golden Horseshoe Real Estate Podcast. I'm your host, Koukun Unosawa. I'm a mortgage broker with Synergy Mortgage Group. And in this podcast, we chat with real estate professionals who share their local market insights, future outlooks, proven strategies, practical tips, all right here in Ontario's Golden Horseshoe. Hope you enjoy it. All right, so we have Rachel here. Rachel, what are some of the best opportunities in today's market? And specifically, let's start with the first-time home buyers.
Oh, first-time home buyers is probably one of my favorite ones right now. A first-time buyer can get into the market for a better price than we've seen in 8 to 10 years. And that first-time buyer has a couple of opportunities to start an investment right away. So they can purchase something that needs a little bit of fixing up and build some instant equity, which we just haven't been able to do. In the last few years, most homes that were being sold were kind of being sold at such a premium that when you were putting money into them, you weren't building instant equity. Second one would be Niagara Falls just opened up. Last week, they sent out the applications for 100 owner-occupied Airbnbs. So if you want to put a little additional dwelling unit, in your home, you can do that and rent it long-term, which would be lovely, or buy a small duplex, which would be lovely. But you also have the opportunity right now to be able to do an owner-occupied Airbnb in Niagara Falls. Surrounding areas as well, you can do that.
Okay, that's very cool. That's very cool. And
Yeah.
especially Niagara Falls, especially in the summertime, the demand for Airbnbs would be very strong, right?
You know what? We have so much going on now that the demand is quite there all the time.
Okay, interesting.
Yeah, the rates are lower, obviously, in the wintertime. But in the wintertime, you'll book up every weekend.
Oh, wow.
And it's fun. You're making, the income of another part-time job within your own home.
Mm. I I always thought of that idea as a really good option. Like even the home that my wife and I live in, we have a little basement apartment. We used to rent it out. Now we kind of made it back into our home. But the one idea that I had was if I ever were to rent out on Airbnb, we'd have a perfect suite if ever we had family or friends come to visit. Like we just block off the time we want for ourselves, and then when it's not being used, you can generate some really good revenue from that space, right?
I have a ton of clients who've done the exact same thing. And most of them in Niagara Falls have been operating kind of illegally
Mm.
until just now, but some of them have rented out to hockey billets and students. But the Airbnb was the best one because they said the same thing. If my family's coming down or if we need the space, we can just block the space. But if we don't need the space, it gives us an extra few $100 here and there.
Yeah, yeah, no, that sounds like a great idea, especially for someone who's a little bit more conscious of their budget, right? They're stretching themselves for that first home, but they want to find ways to make some extra income to offset the costs. So I really like that philosophy when you're getting started, because rarely are people buying well below their means on their first home. I see it more often on the second and third, but the first one, it's always kind of a stretch to make it work, right?
Always. And I always say to people who are looking, and if they're not adverse to investing, if they're not adverse to having a tenant or a situation like that in their home, I say you're going to spend maybe $100 to $150,000 more on the home.
Mm.
So you do get the help of the tenant paying for it. So the $100 to $150,000 extra on the purchase price is really costing you somewhere between like $500 and $800 more per month.
Mm.
But that apartment's going to rent between 12 on the lowest end and most likely closer to $2,000 a month.
Mm.
Like that's a huge gain.
Yeah.
So it's only costing you, roughly 500 to 800 a month, but you're profiting 13 to 2,000 a month. That's like, it's a no-brainer.
Mm.
But a lot of people obviously don't want that investment opportunity right away, especially if they have kids or something. They're so busy right away. Those ones are tending to move into the homes that are needing a little bit of work so they can build the instant equity.
Mm. Yeah, which is still a really good option, right? It's still a good way to sort of build equity in their first home. I guess let's move on to on the selling side of things. When you're working with sellers right now, the constant feedback I hear from everyone is there's a lot of listings. It's hard to sell. What have you seen in terms of what's actually worked to move properties? And I guess what's the advice you're giving sellers generally nowadays?
That people who are purchasing the homes that will stand out are the homes that are spotlessly clean.
Mm,
So we obviously go in and stage all of the homes, but if the kitchen's old, people don't mind it as much. If the house is impeccably clean, so every house that I've been listing, we've had like professional cleaners go in and kind of scrub the baseboard, like do all inside the cupboards everywhere. It's really appreciated right now. I think it always was, but the cleanliness and getting the impression that the home's been well maintained. It's
mm,
okay if it's dated or if it needs something. Um, but having it impeccably maintained and clean, it's been going a long way. It sets you apart, I think, because so many people are so busy. You go into so many listings that seeing that house that you could eat off before, it, for some reason, in the last year, it means more.
interesting. Yeah, no,
I know.
I definitely remember uh, having seen quite a few homes that were owned by um, actually the bungalows built in the 70s where it was a single owner. They've maintained it impeccably, but it
Yeah,
completely dated, right? But every time
yeah.
you go into one of those homes, usually you can tell that it was cared for so many decades, right? So in a way, when you say that, it reminds me of that. Like at least a clean home gives people the impression it's taken care of, right?
And a feeling of nostalgia, right? Too,
Mm,
you walk in, you always think, oh, this home has good bones. Like you just have this feeling, but it's meant a lot in the last year when the market's been down for sellers. Um, it means a lot.
mm. Okay, that's really good advice. I guess finally moving on to investors. If an investor is coming to you wanting to buy an investment property, what what's your advice to them these days?
Um, I always kind of start that process with how much time they want to put in, right?
Mm,
Because the more, and then how much money they want to make and let them know if those correlate. Um, obviously, it's obvious, but people don't think it's obvious. But obviously, the more time you put in, the more money you're going to make.
mm,
But time is also a headache. So if it's a single family home, you're not going to be putting much money into it. Sorry, not much money. You're not going to be putting much time into it. It's going to almost take care of itself, right? You have
mm,
one tenant. There's not going to be a lot of turnover. You're not going to have to cut the grass at one property. You're not going to have to pay bills. It'll be plus bills. And then kind of the level goes up from there. So a duplex has a little bit more work, maybe a little bit more turnover. Maybe you have to pay the gas bill and the hydro separate.
mm,
And a triplex, a fourplex, five, student rental, and then Airbnb. I would say that's kind of the tiered level. So if somebody said to me, I would like to only do 1 to 2 hours per month. I would like it to not interfere with my life whatsoever. I would like the tenants to stay for an average of 3 years. But I want to make $1,000 a month. I'm going to say those don't relate. That 1 to 2 hours per month on your average bungalow that maybe we purchased with an unfinished basement, knowing that we can add an additional dwelling unit in the years to come, if there's future investment opportunity. But for now, we're just going to rent it out. You're going to make $100 or $200 a month,
mm,
not 1,000. On the Airbnb, if it's a lot more work, you're going to make 1,000.
mm.
Is that
Okay.
fair?
Yeah, very good advice. Very good advice. Yeah, I think it's yeah, in my own investing, I've constantly gone from one strategy to the other, and I feel like having that conversation up front to decide on what made the most sense and just sticking with that one thing would have probably helped a lot because every time you try something new, it's a learning curve. You're learning how to,
Mhm.
yeah.
Every time you do it, it's something new. And it's nice to be thinking of all of the things, but you still have to get a system in place. I've had a lot of clients who tried to kind of go all over the map and almost go too hard too fast, and they
Mm,
become overwhelmed, and then they try to sell off their portfolio. A few people have let me step in, um, friends included. To be honest, a couple of good friends of mine, they became good friends because I said, please don't sell your investment property. I understand that you're overwhelmed right now. Let me take over. I always say to my clients, when When you're done, call me. Like when you're fed up, when you need a bad guy, when you need someone to go and speak to your tenants because they're not listening to what you're saying and you're just all done. When that happens, call me. Don't wait until you really are all done. Just call me and let me just do the hard part to get you kind of over the hump so that you can keep going with your long-term goals.
Oh wow. So you've sort of stepped in and had some of those conversations.
I've done that a lot. I'm thinking of my one good friend in general. Um, it would have been around the time of my son's birth, so say 14 years ago. She had one investment property left, and she said, Rachel, we've done a lot of business together, and I feel like I owe you a referral or an opportunity to be my realtor. Because I had not been her realtor yet, and we had done business on another front. And she said, I have one investment property left. I owned it before I was married, and I'm all done. The tenants won't pay. There's a boat in the driveway. Everything was a mess. And I think I'd only met her in person once. We had just done all of our transactions over the computer. And I had said, no, you owned this before you were married, so it's yours. If you sell it, it's never coming back. Let me step in and take care of it for you. And I would say that's one of my dearest friends now. But that one house she did get to keep. I evicted the tenant for her and got the house clean and got her a new fresh tenant and kind of handed it back to her and said, "You're good." And it catapulted her into buying investment properties again. And she's even severed land off of investment properties. She's built an entire empire.
Oh
And
wow.
when she was really ready to let it all go.
Oh wow. Yeah, that's quite the yeah, like a of course it wasn't easy for you either. You had to kind of deal with that tenant and have that conversation, but that gesture, that effort you made early on made such an impact on her over so many years, right?
I would rather I would rather take that time and stress on because you're once removed. It's not as stressful. You're not taking it as
Mm,
personally. And I've had to do it many times where people are just they're fed up, they're done. And I'm like, just let me do this for you. Let me get it cleaned up. And I kind of hand them back the keys to like a fresh slate again.
mm,
And it's worth it. And that same friend, in turn, I had to call one time and I said, I have tenants that are continuously paying late. And you know that you can't really kick somebody out for continuous notice of late payment of rent.
mm.
But I said, I'm going to email you the forms. Can you go and hand them a continuous notice of late payment of rent form?
Okay.
Explain to them what this means. Explain to them that you are now taking over as the property manager. Just because I think some tenants or some people, they get so used to you, they have you pegged and they think they can take advantage. So she had a conversation with those tenants and said, just so you know, you're going to be evicted. You've been more than 6 times late in the last 12 months. It will go to court. Do you understand? And she only had to have that one 5-minute conversation and the tenants completely turned it around. They were like, oh, I better be on my best behavior. Because I think sometimes seeing a fresh face is like, oh, I better get it
Mm,
together. This isn't, my mom that I can mess with. So kind of as friends or colleagues or business people, just being able to step in for each other once in a while, it just kind of somebody holding your hand over the steepest part of the mountain really, really helps. And then it can make you keep going because our end goals are big, right? But sometimes, if you have two of those problems in 1 month, you could just say, is it really worth it?
yeah.
But it is. And you just need a little bit of help.
Yeah, absolutely, absolutely. I think this honestly segues into a really good topic, even on why it's so important to work with a real estate professional, right? Many people think, and I've seen this often with investors after they've bought a few properties. They feel like they know how the paperwork works, they know how the transaction works, they know how to look for a deal. But I often see that even someone who's supposedly an experienced investor can get so emotionally attached when it's their own deal, when they're selling their property, buying their own property, that having a third party, someone trusted who can simply explain their options, help them make the right decision, it goes such a
Yeah.
long way. Even if you know what you're doing, and like you clearly know what you're doing, but even in that moment, having someone to take that 5-minute conversation went a long way, right?
So all of my investor clients are not full-time investors.
Mm,
I don't have one that doesn't have another job or something.
mm,
So I would say if it's another scenario like that, I am in the swamp all day, every day, and they are not. In terms of real estate investing, things change daily and they change with the new tenant rules, new tenant forms. I meet with a lawyer once a year as the kind of a joke. We meet up once a year and we change our Schedule A for our residential tenancy agreement.
mm,
Um, for every time we have to add something to one of my Airbnbs, I have a rolling spreadsheet that are consumables that you have to purchase to get started and staples that you have to buy to get started. One cheese grater, one blender, one toaster. Like I have it all spreadsheeted out. And I have it spreadsheeted out per bed. Like each bed, you need 3 sets of linens, 2 mattress covers. Like I have the spreadsheet. So once I do it, I have the system for you. So you don't
mm,
have to go and reinvent the wheel. You don't have to go and do anything. You can just take it from where I've kind of brought it and
mm.
make it your own. Lots of people will tweak it or anything like that, but I really genuinely try and care to be in the swamp all day, every day for you. Like
Mm.
when the additional dwelling units have come out, I've met with the people so that as soon as the grants came up in St. Catherine, I could let people know. As soon as the grants came up in Burlington, I could let them know because they're fleeting. They're in and they're out very, very quickly. Um, yeah, so I would say even my savviest investor clients, they rely on me very, very much for I'm thinking of selling this in 3 years. Where am I going to get my highest and best price? What do you think I should do? And we kind of have to start planning. So I'm the person in the trenches so that you guys can go and do the rest of your life. So that this is just a part-time gig for long-term gain, hopefully.
Yeah, yeah, no, I think that makes a lot of sense. How do you navigate the conversation then? Because I've had a few of these, and I'm curious to hear your perspective. Um, Usually, it's someone either younger or it's someone who may be frustrated with their current job, and they come to you and say, "Hey, I want to get into real estate investing, and I want to be a full-time real estate investor." How does that conversation usually go if someone brings that up to you?
Okay, so my younger clients that have come up to me and said that, um, have wanted to be full-time investors by purchasing kind of your meat and potatoes, duplexes, triplexes, maybe an Airbnb. And my older clients who have come to me as investors wanted to do the private lending side.
Mm,
Um, Never the older people saying, "Can we do the duplexes, Airbnbs?"
yeah.
And never the younger people saying, "I need to private invest," because, they don't typically correlate. Um, but the younger clients have definitely, almost all of them had a false sense of what they could do. A lot of people have come to me, younger people that have said, "Oh, I'm just going to have 3 investment properties and then I'm going to spend the rest of my days in Florida." And I'm like, I have 25 investment properties and I don't spend my days in Florida. Um, it is the tortoise and the hare. It is slow and steady wins the race. It is not get rich quick, or I haven't, felt that way. Um, Smarter investments have definitely given me more profit or more possibility for profit. Um, yes, so I do have to talk some very young, excited people off the ledge sometimes, and let them know that those goals aren't exactly realistic. And typically, my older clients that come to me, um, they're thinking of downsizing their house and how can they reinvest um, the money that they've made from their primary residence into real estate without too much risk. And we typically go the private lending route with that because I do make sure that they're safeguarded, um, extremely safe loan to values. I go under properties myself so that they can feel great. Um, and then same, as soon as I do it myself, I document it so that if somebody calls me and says, I was thinking of private investing, and I'll say, do you have cash, RRSPs, or TFSAs? And they'll say, I didn't know I could do my RRSPs and my TFSAs. And I just say, okay, let me send you over the information. I personally do it through Olympia Trust, but you can also do it through um, B2B bank, but they make you need 10% cash in. And some of the TD Waterhouse will allow you to do it at a certain level. So I can just tell them what I've done and send them the information that I've already documented. So it's kind of easy to get started. You've already gotten my 20 years experience in one email, and you can start from there instead of starting from day one.
Yeah, there's so much value in that. Like even in our business recently, I've me and my underwriter, it's my like anytime we're starting anything new, including this podcast, it's hey, we need to have a document and we need to
Yeah,
document what are we doing every single time we do it. This way, if one of us is not around on vacation, the other person knows exactly what needs to be done. And like in every step in our business, it needs to be written down somewhere. Otherwise, like,
going off the Bible. You need Bible,
exactly,
right?
exactly.
Yeah.
So that's awesome. That's awesome that your clients get to benefit from that simply by working with you and sort of having you in their corner. On the private lending side, I am curious. So you mentioned you've been doing private lending for a little while. Uh, are you more geared towards individual private lending where you'll sort of connect directly with someone who needs the funds, or have you done it more where you've dealt with some kind of institution that's lending it out to multiple borrowers and you're sort of lending it to them?
So I advise my clients kind of where to go, and I tell them a few mortgage brokers. I'll say this person, this person, this person. I know, I love, I trust. I'll put your name on my list. I will call them and let them know that you have money available, and they will call you. They'll send you a full application for a person, and you can go through it. And if you say, yes, it looks good, Rachel, um, they think the house is worth, or the appraisal came in at, $1 million and it's this house on this area, I give it a quick look. But often I just go through because
Mhm.
I have, you just, you just never know. And it's our money. It's not like, if we lose $250,000, that's our retirement. Like
It's life changing.
it's not
Yeah.
to be taken lightly. Absolutely. So I kind of just go through, and I will say there was only one time where the appraiser, because you don't know all of the appraisers in town, right? And a lot of people now with their auto appraising, and although to me it should be such serious work, some people don't take it as seriously.
Mm.
So there was one house that I went into, they said it appraised for like $850,000. And I thought that's really weird. How is that possible? And I went through, and it was a one-bedroom house. They had the renovations they had done devalued the house. And I had kind of said, like, what are you refinancing for? And they said they needed new appliances and they needed a new roof. And I'm like, well, what's your exit strategy? If you can't save for appliances and a roof, like, how are we going to be paying this debt out? And essentially, they were just hoping that the house value continues to grow and they can keep borrowing on it. And I obviously, I think that was, no, it wasn't for me. I only like, I do that with like my very, very good friends and clients. I don't think a stranger would come to me and say, hey, Rachel, will you private lend for me? Because it's like, you know, such a big deal.
Sure.
Um, I have had a lot of clients who were in syndicated mortgages through Olympia Trust. And then they had come to me and said, I hear that you've been doing this kind of on a smaller scale, but a little bit of a safer scale. And those people I have. So I, just do it because I do it for myself, and I do for them what I would do for myself.
Mm.
I had one mortgage go south,
Okay.
and we, it was one that I would never have told any of my friends or clients that this is a good mortgage. The numbers were too tight. I said to my husband, the numbers are very, very tight, but I would like to try and help this person because they really need it. And it did go south. And, we flipped the house and made all of our money and made some profit. We made maybe 40 or 45 grand profit on it, but I would never get into mortgages hoping to foreclose. That's for sure.
Yeah. Yeah.
Yeah. No.
Yeah. The stats, at least what I've seen on this is more on the institutional private lending side where borrowers get a private loan from an institution. They're pretty abysmal. It's something like 3% of people who get a private, and this is typically a private first mortgage, but could be private second as well, who are able to then make their way out of it over into a B lender or eventually an A lender. Like it's the stats on that are very, very rough actually in terms of people
I've
making.
only had one go bad ever, and all of them, I mean,
It's not that they won't
I,
pay though, right? They may pay the private loan. They may sort of continue to make those payments, especially if they have enough equity. I think it's more just in terms of many times. I
they
think some,
can't get out from under that rock, right? They'll have to
yeah,
sell it to get out of it instead of, I know exactly what you're saying.
exactly.
I would say all of the people that we're giving privates to, it's for a reason.
Mm,
I need to pay off my taxes so that I can refinance the house traditionally and
okay.
approve with the lender.
Yeah.
Um, I need to put an apartment in the basement. That's happened for years. Just right now,
Okay.
they're starting to give you, I want to say it's definitely RBC. It's allowing you to borrow up to 90% of your home if you're adding an apartment in the basement. It was
Yeah.
never like that, right? So they're just starting to catch up with that theory. So
Mm.
I have never lent somebody a private that wasn't for a great reason. There was one lady in Welland. Somebody had referred her to me, and she came to me and said, I need some private money to get out of debt, and then I just have to sell this house and get out. And she will never own again. And I gave her, she didn't call me for private. She called and said, I just have to get out of this house. I'm a single mom with two kids, and I just can't afford it because she had privates on it that were so high. And I
Mm.
said, oh, so I negotiated those privates to a little bit of a more reasonable rate. I gave her one more private to sever the land next door. So it took about 1 year. My one planner friend did all of the work for her pro bono up front.
Oh, wow.
All we had to pay was the surveyor. And I mean, it's work, right? Severing a piece of land
Yeah.
is
Yeah.
work. It did take close to a year. It was stressful. But at the end, she she probably has a mortgage on her property now. It's under $100,000, and she'll keep that property forever.
Wow. So she was
Mhm.
able to save, you were able to save her that property instead of having to sell it and walk away from that
Yeah,
property.
we saved the house, and we got $175,000 for the lot next door, and it probably cost her just even including lending fees because her lending fees were higher, and then everyone kind of worked pro bono until the end, and they got paid. Um, so say it cost her $25,000, $30,000 to do it. But in 1 year, she sold the house or sold the lot for $175,000, paid off all the debt, paid off almost all of her mortgage. I think her mortgage is actually on $50,000 now that I'm saying that. And she gets to stay in her house forever. And it's manageable. It's like doable. So the privates, I like them when they're going to something good, like
Yeah.
so that it's making somebody's life better in the end. You don't want to dig them into a hole.
Yeah.
That's not what I like.
No, no, absolutely, absolutely. I'm on the same page. I think there's a time and place for it, right? When because
Okay.
especially with many of the banks, they have their like I'll tell you this. I'm helping a client right now with a refinance on a new build fourplex, and so they built this fourplex. Um, all the lenders that I'm dealing with in the broker channel, the A lenders, B lenders, are all saying we want Tarion insurance, right? A new build so that if the borrower defaults, if they have to take over the property and sell it, it has Tarion insurance. This client's working with a builder who kind of consulted with them, who said, "Yeah,
Hmm.
sure, I'm licensed with Tarion. I'm happy to get that for you." They apply for it, and Tarion replies, "Hey, we don't offer Tarion insurance on properties that have more than 2 units." So now we're in this weird middle place where we literally we can't get it, and the it's a requirement to get residential financing. So we're now exploring the commercial route, but it's just it's a strange, like, why make a rule that can never be followed? Like
Right.
it, and this is the reality in lending. So in certain cases, the private lenders are really a good way to fill in the gap, right? Even the situation you described, like that option. I mean, you went above and beyond in terms of helping to sever the lot and look for value there, but even had she come up with that idea on her own, she still needed the time and the funds to bring that plan through, right? So, oh wow.
Well, that's interesting about that fourplex. I had no idea about that.
Yeah, yeah. And literally now I have another client who is building a triplex in Niagara Falls. And his plan
Yeah.
was the same. So he got a huge line of credit on his home that was going to fund the build. And then once it was done, he was going to exit. And now my next call is going to be to him to tell him, hey, just so you know, this is going to be an issue
I
you're going to
wonder if
face.
you can do a duplex with an additional dwelling unit.
So
Would that
even
be like a gray area?
So even this new build fourplex isn't actually a fourplex. The way they got the city to approve it was that it was a legal duplex with two in-law suites. That was kind of the legal definition by the city. But even then, like, yeah, Tarion, their hard line is just how many units are available for rent. If it's more than 2 units, we don't insure those type of properties. So it's
Ouch.
yeah. It, it's a strange, like when the province and the federal government is pushing for more rental units to be built. And at the same time, lenders have this requirement and the Tarion just doesn't offer it. It's
And then what about on resale? Like if they, sold it to themselves kind of thing, then would it be
the same issue, right?
voided
If
because it's on
if you're
resale?
buying a property within 12 months after it gets built, I believe Tarion is a requirement. Um, but actually, that's a really good question because if it's not available, how can it be a requirement in the first 12 months? Like if you can't get it. That is
But
actually
if
very
your
interesting.
person didn't find out their home, if he wanted to keep it, could he sell it to his corporation kind of thing and then still keep it?
We would face the same issue probably from the lending standpoint, right? The lenders will say, okay, when was this property built? Do they have Tarion insurance,
Oh,
right? Like, I think from a legal standpoint, we should probably get a lawyer to comment on it. But my assumption is that if it can't be received, then it can't be a requirement in order to sell the property. Like, if you literally can't get it, that can't be a rule that you have to follow, right? But
so that all of the systems not keeping caught up. But the banks right now, I feel like are just starting to catch up with the need for more housing, right?
Mm. Yeah, very recently, the one thing that I was very pleased to see is more lenders opening up to garden suites, where they'll
Yeah.
allow an appraisal on a garden suite. They'll look at it as a full second unit. I remember back in 2018. So in Welland, there are properties with garden suites that are very old, from like the
Yep.
1920s, 30s, right? At some
Yep.
point back then, it was allowed. And I remember a client of mine was trying to buy one of these, and the lender literally said we would appraise it as an like an oversized garage. We'll give him
Yep.
like 10, 20 grand of value for it. So the
We
house itself.
only appraise the main property of the house.
Mm,
That's it. And one outbuilding, we'll say, as an outbuilding.
mm,
We had the same in the falls for years. So I've always said to people, if you put something like that in, you have to be very, very careful because if it
yeah.
could sell, it's worth 800,000, but the main house only appraises for
Mm,
650. You're doing 650 plus the 150 in cash. But now, just now, it's
yeah.
starting to change, and I'm so happy.
Yeah. Yeah. No, it's now I wish this has happened like 2 years ago, even like
Mhm.
when the market was a little bit more active, because like the numbers we're seeing, at least from the few clients of mine who are exploring this, they're saying, they put in like 150 to 200,000 into a garden suite, but they can sometimes generate 1,500 to 2 grand in rent from that additional unit,
Even.
right? So
Yep.
like those are amazing numbers that now this market, everyone's a little bit more cautious. But back even a few years ago, everyone was open to if I can borrow at 2% and make 10%, like that's a no-brainer, right?
Absolutely. I still think it's a no-brainer.
Mm,
I I think investing right now is the smartest thing you can do. I think so many people are out of money and are
mm,
stressed out. But for the people that have anything left, now is the time absolutely to refinance and to be investing.
interesting.
I haven't seen numbers this good since 2016. And the quality of tenant is so much better because housing is in such a need.
Ah,
So your quality of tenant is better and the properties are a great buy.
mm.
Yeah, I
Ha-
haven't seen
any
that happen in
any
a while.
recent sort of properties you've seen or you've had clients offer on that you felt stood out to you as like paint a picture for like when you say good opportunities, what give us an example or some color. What does that good opportunity look like right now?
Ooh, so there are quite a few homes that people have not been able to afford to put the work into that they wanted to. So they're selling it with so much untapped potential.
Mm.
You're saying for the first time, there's a house right up the road from where I live. It has a severable lot next to it.
Okay.
Before, somebody would have knocked on their door, picked it up privately, bought it on day one, severed the lot, and for the first time since 2020, when the market went crazy and money was cheap, you're seeing actual properties come up where you can sever the lot, like you or I could buy one, sever it off, and build. You're seeing ones that it has that high, dry, beautiful basement, and they couldn't put the money in to finish the basement. So now instead of the $150,000 to put an additional dwelling unit in the back, you can buy it and put 40 grand into the basement and have a completely finished additional dwelling unit there. Whereas before, the potential was really lacking. Everybody had the access to funds to cap it out on their own. And now people don't have the access to funds to cap it out on their own. So you're seeing a ton of properties out there, commercially zoned properties for here in the falls for Airbnbs. Crystal Beach, I don't think everyone always makes a big deal of bad press. So when Airbnbs were um, on hold in Crystal Beach, everyone was talking about it. You can't buy an Airbnb, you're not allowed, blah, 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 blah. There's only a limit of, it was 150 limit in Crystal Beach for the longest time. Last May, so a year and a bit ago, they changed it to just the zoning of R2B and then kind of all up the lake and the river. And nobody kind of like talked about it. It was quiet. So nobody even knows that there's no cap in Crystal Beach. Nobody knows that it's just a zoning requirement. And there's tons listed, like tons.
Mm.
So yeah, there's so many, depending what you want for your lifestyle. I like Crystal Beach. I say Crystal Beach. I was born and raised in Ridgeway, so I'm a little hometown proud. But we bought ourselves a place in Crystal Beach to Airbnb out, but to go to for our summer cottage. And we have had so much fun there. I don't even think I would care that it made money in a year. It makes money and it's our home away from home,
Awesome.
you know? So depending how you want to invest and how you want your lifestyle to work with it, there's so many options.
Okay, very cool. Very cool. So Rachel, let's pivot a little bit into a bit about your background. So you mentioned a little bit that, you've been investing for quite a while. You've been working as a real estate agent for many years. Like what was your beginning like? What got you into this industry? And especially in the beginning, what were those first couple of years like?
So my story is definitely one that went on a whim and a prayer, I would say. I finished high school and I got into school for X-ray and ultrasound or for nursing, and I couldn't decide what I wanted to do. So I went and worked as a sales rep in Toronto for a year. And I was like, my mom wanted to kill me badly. I think she almost did kill me. And I said, no, I just don't want to waste the money and go to school. And she's like, no, you just want to take the easy way out and you just want to get your life moving, but you need to go to school first. And I said, but I don't know if that's what I want to do. So I worked as a sales rep. And then I was thinking in Toronto, I lived in Scarborough. And I thought, if I really liked sales, I like talking to people. I like kind of the different atmosphere every day. Um, I think I enjoy that, but I don't know how I can do that and kind of be at home. I love going to Toronto, but I don't think this is where I want to settle down and make my adult roots. So I thought, well, maybe real estate. And my brother had a hockey coach who was in real estate. So I called him up and I said, I was 19 years older and maybe just turned 20, 19. And I said, Mr. Boone, he's passed away now. Mr. Boone, I'd like to get into real estate. And he said, oh, you just go to this website and sign up. And he kind of told me where to go. So I did. My mom paid for my first three courses. And I was licensed at REMAX at 21 years old. and I took all of the money that I saved for my university education
Oh, wow.
and I bought my first house that summer. So I was licensed in November and then so November 2004. So June 2025, I closed on my first triplex. And my mom had to co-sign for it, but I had a big chunk to put down, and that was the first one. And then I kept buying them from there. I had three triplexes at 24 years old.
Oh, wow.
And then I just kept buying them and moving on from there. Mhm.
And you mentioned now currently you have a portfolio as large as 25 properties.
I think I should count. I think my husband and I collectively have somewhere between 20 22 buildings or properties. And then there would be more than that in units because some are three, some are two, some are one. Um, yeah. And they kind of range the gambit. So single fam or condo, single family, duplex, triplex. We don't have any fours. And then we have a few Airbnbs.
Okay, very cool. Very cool. Like
Mhm.
it's quite the accomplishment. Like I've seen many people buy one or two. I guess I'm in this camp now. I bought up to 10 properties with partners. And then more recently, I've decided, okay, I want to keep my life simple. So sold off a bunch of the partnership properties. Thankfully, everyone made money. So we all walked away with a little bit of money in our pockets. And now yeah, it's just my home and two rentals that I own. So it's fairly small, but it's very simple. It's very
Yeah.
easy to manage, right? What does
I
your
like
day to,
easy.
yeah,
I like easy to manage.
yes, no, absolutely,
Oh,
absolutely. We had a fourplex once. One of the partnership properties was a fourplex. I lived in one of the units, so I convinced my family. Actually, my family bought two other properties, like single family homes. Those were some of the first properties. We refinanced those to buy this fourplex in St. Catharines. And then I moved into one of the units in order to get it to turn it over. And also at that time I was renting in St. Catharines, so I figured, okay, might as well live in the family property. That building worked out well financially, but gave us so much troubles. It was one of the hard, like going to LTB. I had the tenant in the unit I was moving into challenge me in the LTB to say, hey, he's not going to move in. So I show up there with a paralegal. We sign an affidavit. I'm there in person. I'm telling them, yes, I'm going to move in. The day I move in, the guy drives by and he's like checking to see, am I the person moving in? Right. So,
yeah. And now, if you did that and they drove by and it wasn't, the landlord tenant board is threatening $25,000 fines.
yeah.
So you really do have to keep it empty for a year or move into it. We've definitely had the same, and it's the only way to kick a tenant out. So I think the tenants are thinking, well, it's obviously not happening, and they think that all of the
Mm.
time. But it is the only way to evict a tenant, so it is happening.
Yeah. I guess I will say that's the one opportunity I see for first time buyers who are a little bit more entrepreneurial if they're willing to buy a place, fix it up, especially the type of buyer who's willing to rent out a portion of their home.
Mhm.
Some tenant occupied homes sell for significantly less than just the same home if it wasn't tenant occupied, just because the condition is usually kept as a mess, right? So, uh,
And nobody wants the fear of dealing with the tenant,
mm,
right?
yeah.
But it can be done. The only tricky part with buying one is if you know the clause that says as soon as this deal becomes firm, the landlord will provide the tenant with an N12 notice saying that they're moving in. The new owner will provide an affidavit so that the seller can file the L2 application with the board.
Yes.
On that whole thing at the very bottom, it says, due to the current landlord tenant landscape, you can't guarantee vacant possession. And I've had a few problems with banks saying, no, you have to guarantee vacant possession because you're putting 5% down and you're moving in. So if you're not moving in and it's a rental property, it's different. So we've kind of had to extend the Schedule A and do some funny things with that just because it's been a hard navigation.
Yeah.
But there absolutely is ways to navigate it and it's worked out. And in all of the cases, my clients have won, every single one. And we've
Mm,
had to do a lot of them.
really.
But you're right. It's probably I almost feel like you could broad stroke and close to say, if you're buying a house with a tenant that's going to be a problem, it's close to $50,000 you're going to be saving on that.
Hmm.
It's the tenants devalue the property that significantly.
Yeah.
Hmm.
Yeah. So I guess on the flip side, if you're working with an investor to sell a property,
Hmm.
how does that conversation look like? If he has a property with tenants who are, maybe paying under market rent, maybe they keep it a mess, just
Hmm.
they're gonna make the property hard to sell.
I feel like that's something that goes, if you have any clients like that, or if anybody is in that situation, I feel like you should call me and we should come up with our plan privately. And that's probably not for a podcast. No, seriously,
Mm.
right?
Okay.
Yeah. No, that's not for a podcast, but I will absolutely help you navigate that sale.
Sounds good. Sounds good. Awesome. Yeah. So we spoke about this briefly prior to starting this podcast, but yeah, I know we've covered a lot of real estate. Obviously, you've sort of gone through quite the journey there from getting started at such a young age to buying your own investment properties, building up this portfolio, and clearly you're really serving your clients very well. You're providing so much value in all these different ways that we've discussed on this podcast today. But yeah, just going a bit more personally, if there was one lesson or experience you could share, um, you know, and the person viewing this podcast may be in a different spot. We don't know who they are exactly, but if there was one lesson that you would share, what would it be?
So you just asked me that right before we started. So it did put me on the spot a little bit, but my first thought went to my kids. I have a 7, a 14, and a 15-year-old. And the 14 and the 15-year-old were the people that I thought of when you asked that question. And my response would be, if an opportunity is placed in front of me, oftentimes your first instinct is to say no because it's uncharted waters or unknown territory, and it's scary. And we often just, veer away from what's uncomfortable. And my suggestion in life, no matter what phase of life we are at, is if an opportunity presents itself, just try.
Hmm.
Before you inherently quickly say no and come up with a million excuses why it's not the right time or for anything, not just real estate, just try first. Because I feel like in my life, those times where I've just said yes and put my head down and just tried, the most wonderful things have come from it. So just try.
Absolutely. Absolutely. Yeah, I will say even in my short career here, I've found it remarkable how many of my mentors became mentors from me simply sending an email, sending a message, reaching out to them with no expectation of a response. They're busy, they're successful, they're doing stuff. I had no expectation, but I was like, hey, I just listened to a podcast you were on, or I read something that you put out. It really inspired me. Like, I would love if we could have a conversation, right? Just putting that simple message out there. And so many times people have just they've taken me up on it without me expecting
Mm.
a response, right?
Well, people appreciate people who put forth effort,
Hmm.
right? And you obviously already are doing the same thing for more people moving forward. And if every business owner tries to help the next generation coming in, it's going to be beautiful.
Hmm. Awesome. Awesome. I think that's a great place to wrap up here. Really appreciate you coming on, Rachel.
Thank you so much for the invitation.